Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me remotely is Chris Versace. He's the Chief Investment Officer, co-founder, and thematic strategist at Tematica Research. And we're going to take a look at earnings season and just how investors will assess valuations in what's been unprecedented times in the market. Chris, it's great to have you back with us. We hope everyone's staying well down by you. And I think this is going to be what they are calling a throwaway quarter, but also one of the most important quarters, because we're going to have to shift how we value companies once we start to get earnings reports and guidance out. What are your thoughts around that?
You know, I think that's spot on, Jill. I don't expect that companies will be giving us a lot of forward guidance. You know, over the last 2 weeks or so, we've had a number of companies come out and, you know, some have, you know, done the usual, you know, better than expected quarters. Some have not delivered as expected, but for the most part, they're all holding back giving any forward-looking guidance, more often than not citing the uncertainties with the current pandemic. You know, we are getting some comments about certain industry trends, and we'll get little piecemeal pieces of data that will force us to kind of break out our calculators, our spreadsheets, our abacuses to triangulate the data as we morph through the next couple of weeks that comprise the March quarter earnings season. But I don't think we're getting anything flat out that says, I expect EPS to be X. And I think that's going to be hard for a lot of people to swallow.
And moving along to our first chart of the day here, just the S&P 500 broader market. From a technical perspective, are there any clues that you can see with price action?
Not so much technicals for me. What I would say is that the rebound has been very strong, particularly over the last 2 weeks. And I think there's a couple things at play here. One is we appear to have made the turn in Europe in terms of new coronavirus cases. And there seems to be some talk here in the U.S. about opening the U.S. businesses, you know, around May 1st. We'll see if that tends to come through or not. For me, it's not so much a date, hey, we're opening this day. It's more of a question of what is the plan to get us back open? How is this going to be phased in and staged in? To me, that gives a lot more credibility to any of those plans. But Jill, here's the point. Earnings expectations for the March quarter, they're going to be down year over year, probably going to be worse than expected. If we take a look at what we've already heard from McDonald's, Starbucks, El Pollo Loco, and others, makes the market that much more expensive. So I think people are going to have to be really picky and choosy about where they put their capital to work over the next 3-4 weeks.
Yeah, I agree with you. It certainly is going to be a process versus instantaneously bringing us all back into the open. Let's take a look at our next two charts here. We'll start with McDonald's, then go to Starbucks. Clearly, the retail industry is one of the first sectors that you think of when you're dealing with, the fallout from the COVID-19 economic impact.
Oh, absolutely. I mean, what both of these companies have in common is, you know, they had very good January, very good Februaries. Then all of a sudden, as, you know, COVID-19 took over and we responded by self-cocooning, locking down, you know, call it what you will, the ability of people to go out and buy fell off a major cliff. And that resulted in negative same-store comps for McDonald's and Starbucks. And this, to me, is just the tip of the iceberg, because as we go through earnings, we're going to see a number of different either restaurants, retailers, or other consumer-facing stocks report what they've seen and hopefully share some type of comment on what they expect in the near term. But Jill, remember, the consumer is directly, indirectly responsible for 2/3 of the domestic economy. If they're sitting on their hands, it is not going to be good.
Yeah, I would agree with you. So to wrap up here, there's a couple of things in play. Could it be, a sell or buy the news kind of event where we know it's going to be bad? It's out there. Or do you think that there will continue to be volatility in the market just because forward guidance is really what the key is here, and no one's going to be able to provide that?
I think the latter is absolutely spot on. But what I'll be looking for is bad news no longer has a pronounced effect in the market. That to us will say that, you know, the market has absorbed a lot of the bad news. It's baking it in, so to speak. And then we can start to watch what our next move is from there. But make no mistake, we have a lot of earnings data to go through in the next couple of weeks, and we're going to get, you know, economic data just in the next couple of days that will really tell us how the consumer fared in March and set the stage for April. And I don't think it's going to be pretty. I'm sorry to be a Debbie Downer, but I'd rather be a straight shooter with you guys.
Yeah, I would agree with you, Chris. Thanks so much for joining us.
Happy to do it. Thank you.
All right. And thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.